Hi, everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. Well, this has been a busy week. Last month, I appeared on BNN to talk about stocks and provide my view for what we could see in the market. In particular, one of my buys was Laurentian Bank, a stock in our model portfolio that we recommended to clients.
So, Laurentian Bank, nice 6% yield, okay? Huge upside potential as we measure it. And it's trading at a valuation level which is tied for its all-time low. In other words, if you don't buy it here, when are you going to buy it?
Well, this week, Laurentian put themselves up for sale, and the stock shot up almost exactly to our price target before settling back a little. The reason we were so confident is because our charts, the ones that you see every week on FANG Friday, tell us when a stock is good value and when it is not. And they can tell you that as well. If you would like to join our investment community and become a member, which you can do on a trial basis, go to strategicanalysis.ca/pricing, and you can start today. There are many stocks in Laurentian's position that could be winners, so join our community to make sure that you don't miss out. Anyway, people, we're in an interesting market. For instance, sales of electric vehicles are down. Inventories are soaring in dealers' hands. Tesla is slashing prices. And the stock just happily roars ahead. What's the old saying? What doesn't kill you makes you stronger. If falling sales and crashing margins doesn't kill Tesla, then the company must only be getting stronger. And if the stock market likes it as well, then who are we humble mortals to argue with the fates? Ours is not to reason why. Ours is just to go and buy, I guess. Microsoft was also in the news for winning the right to purchase Activision Blizzard, although the Federal Trade Commission still seems bound and determined to block the deal for whatever reasons their little minds have conjured up. So we took a look at the ensuing acquisition to see what immediate impact it should have on Microsoft. Today, we'll take a look at the two charts, and I will show you what I myself have concluded. Finally, the NASDAQ 100 is about to be rebalanced, and the Magnificent Seven, those FANGs that we follow every week, will be reduced from a 55% weighting to a 38% weighting. Is this going to be good or bad for the FANGs? My own thinking is that, on one hand, investors in index funds will have to sell a good chunk of these high-priced and winning positions, and that might depress the share valuations, for the moment at least. But on the other hand, sticking with those stock weightings means that with any luck in this AI-oriented market, you will be able to beat the index without really trying, just by standing pat. That may well attract some index-conscious buyers who have been struggling to win against the NASDAQ for some while now. For the time being, it looks like the correct stance to take. There's lots of chitter-chatter from the recession poor fundamentals crowd, but the market seems to want to get on with life, and it is doing so this week. Anyway, on that note, let's see what the FANG stocks did themselves this week. But before we take a close look at those FANGs and what's been going on, I have to tell you that we are sitting at 1,998 subscribers as of this morning. So close to the magic 2,000. So first, I want to say thanks to everyone who likes this video and all our subscribers. But I also want to ask you, if you have not done so, please add your 2 cents and hit that subscribe button. It's free, and we won't be bugging you to buy anything that you don't wish to. Okay, well, let's start off with the AI Commander-in-Chief, NVIDIA, which goes from strength to strength. And you'll notice, looking at that chart, sort of was sliding along between its HB4 and 5, then it moved up a notch to its HB5 and 6. By the way, that's 26 to 33 times book. That HB6 was a very, very long-term high, and it's now broken above that old high, which stretches all the way back to 2000. Well, in my experience, when a stock makes a brand new high, it typically has some miles to go before it sleeps. I would not be surprised if NVIDIA will get up to its HB7 and can even bust out and go beyond there. Very promising. Amazon has broken out over its bubble price. It's kind of mushing along, but I think it probably heads to its HB1, which is 9.5 times book value. Netflix, for whatever reason, it's not really an AI stock, but nonetheless it's kind of going with the boys, has broken out above its bubble price, did that usually break out, pull back, and is now moving on. We certainly have to stay with that one. Apple sort of casts a little bit of a shadow on the FANGs. However, what I have to tell you, by breaking the HB6, which is 33 times book value, I'm not sure that actually has occurred. We're expecting a new balance sheet very, very shortly, within the next 2 weeks. I suspect that if the company has been buying back shares, as has been the case, that HB6 is going to come down, and we'll see that the stock remains in that nice channel there, bouncing along the HB6, as it's a 33 times book. Meta's breaking out, isn't it? And remember that the old high for Meta has been its bubble price, which is it has hit 3 times before in its fairly long listed career. I think that's where the stock is going to go. This new Threads program of theirs, I don't know how profitable it's going to be, but they're just bursting forward with subscribers. So that, I think, is going to attract a lot of attention. Now, I wanted to take a look at Microsoft, but I wanted to start off with its acquisition target, Activision Blizzard, because what I want to do is show you the values at Activision Blizzard, and then we'll look at the values at Microsoft and kind of see how they go together. Well, the first thing that stands out is that, look at the stock. It's been riding its fair market value, and it's only on this acquisition is only going to be about 10% above its fair market value. So, compared to most of the FANGs, you might say Activision is cheap. However, it may be cheap for a reason, and that is that the ROE, return on equity, of this company is only about 14.5%, and that compares with the 30% for Microsoft. But finally, when I look at the balance sheet is very, very strong. So this is very definitely going to be accretive to the values in Microsoft. So when we look at Microsoft, what do we see? First of all, the stock is trading way, way, way above its fair market value. So this is very definitely going to reduce that spread between the price and the fair market value. Secondly, it's going to add to the strength of the fundamental strength of the balance sheet itself. But thirdly, what we're going to see, I think, is that there is going to be a fair jump increase in those structural prices. So what we may well see is the stock prices up here, the HB1 is here. We may well see them closing up. In other words, making the stock cheaper. It's going to be interesting to see what finally happens, but that's how we see things. It's definitely going to be accretive to the value of Microsoft. Finally, Alphabet. Well, we know what Alphabet's been doing. It's been dithering on either side of its mid-super growth price. And indeed, of course, if we go back for 2 years, we will see that the stock has done nothing but dither on either side of any of those structural breakpoints. Well, it's moving back up to the MSG price, and I suspect with a good market, the stock is heading higher. And then finally, Tesla, with all of the issues and problems that seem to be out there, what's it doing? Well, it's broken out above its HB3, which is 12 times book. Been fairly strong the last couple of days, and certainly today. Looks like it's heading higher. Now to summarize, looking at the FANGs, remember what I asked you last week. Do you see much evidence of market weakness? Not really, did we? The FANGs have held in very nicely with their heavy focus on the AI excitement. For the FANGs, NVIDIA, Amazon, Netflix, and Apple, a bit loosely, are hanging in nicely above their current immediate support levels and look to me as if they want to hold here and indeed work higher. Meta, with this new Threads platform, which has been designed to try and knock Twitter out of the box, is breaking out today for what may be a final run to its bubble price. That's 7.4 times book. Last week, I did say that if one did not own the stock, I guess you might wait for some confirmation of the shares to see that they are breaking out over their mid-super growth price. That's 5.5 times book. But personally, I said that I would bite the bullet and buy. Well, it's breaking out, and I would certainly buy. Alphabet and Tesla have been dithering around their respective breakpoints, but I suspect that the market, and I mean the NASDAQ and the Standard & Poor's, will be pulling them higher. That leaves Microsoft in suspense with its pending Activision acquisition. It will be accretive to the value of Microsoft, as I hope you saw today, and I suspect that it will go through, FTC or not. But if I were looking to buy with fresh money, I might hold off a little bit. As this is a very heavily weighted group of stocks, I think that it's a pretty safe bet that the NASDAQ and the Standard & Poor's are heading higher, although a little of the steam may be being taken out of the NASDAQ due to that rebalancing. Nothing against the value stocks, which I suspect are biding their time, waiting for the growth stocks to get out of their way. But this does look very much like the period leading to the high-tech stock peak 23 years ago in 2000. However, we're not at that peak yet. So as I said last week, let's just enjoy the FANGs while it lasts. A final word to any of our viewers who may have come late to FANG Friday and may be wondering, what exactly is going on with this SVA methodology that you are watching here today? If you would like a thorough introduction to the analysis, the how and the why it works in practice, then please visit us at strategicanalysis.ca today. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you